you.
Or welcome, loyal listeners, to another episode of Manager Memo. Too, too many business owners spend years building great revenue only to realize too late that they built a company a buyer won't touch because the business is entirely dependent upon them. Our guest today is an expert in fixing that problem. Muriel Touati is the founder and CEO of Exit 3D Studio, a firm that helps founders transition from being the engine of their business to building a scalable, transferable growth infrastructure that buyers and lenders trust. Muriel and her exit scorecard can help business owners ruthlessly evaluate whether their companies are truly exit ready. Hello, Muriel, and where does this podcast find you?
Good. So I am in New York City at the moment. It's
That's
where I
wonderful.
am,
Thanks.
where I
Thanks for
live, but
being.
I am originally from France.
Oh, I could never tell that. You have that wonderful accent and a great smile. Thank you so much for being a guest on the show.
And thank you for
If you
having
could,
me.
let's start out with tell us about yourself and the journey that led to your creation of Exit 3D Studio.
Sure. So when I first moved to New York in 2021, I was still running my French business. It was an online and training and coaching program helping entrepreneur leverage LinkedIn. And so I was working mainly with my French clients through Zoom. And last year in 2025, I was feeling that maybe I was a bit missing out, on opportunity that New York and the US had to offer me. So I've decided to yeah, I was evaluating first. Should I create a new business? Should I actually maybe buy one? Because I heard about it. So I've studied the topic inside and out. I joined a community of business buyer, and there was a program that helped me evaluate deals. Um, Perform, good due diligence. I mean, I learned all about the process to buy a business. And I signed 100 NDA. I've submitted many offers. And at the end of the year, I was so happy I got an offer accepted. And I also had I was also SBA approved for up to $5 million. So that was really giving me a lot of possibility. So I made that offer for $3.7 million in a marketing agency since it was most relevant with my background. And and then I discovered during that experience, during the due diligence that I had to do, I discovered that what was sold to me was not what it really was. And by that I mean they were talking, for example, about recurring revenue, but when you go into the details and you look at how the revenue is made, the revenue per client, the number of client, everything, I discovered that the revenue was more like a project based, rolling month after month. Basically, every month they were able to have 10 more clients. Great. But every month they were also losing 10 clients. So I
Right.
really didn't feel good about buying an agency for almost $4 million that was leaking, their
Yes.
client constantly. So for me, it was the biggest red flag. Plus, I found many others red
Yeah.
flags, a big dependency on the funder that were hiding. And so this is how, after months of trying to find that business to buy, I was a bit exhausted from it, but at the same time, more, stronger and more knowledgeable about, business buying, and came out that idea like, what if I could just fix those businesses before they go to market so seller will get more money for their business, and me as a buyer, as well as so many other buyers in the buying community I am in, they could also find better businesses to buy, like not better, but less risky business. Because
Right.
at the moment, like a business that is leaking client, or everything go, like the founder is doing everything, or is not a safe business to buy. It's a business that is going to disappear, basically. Gonna lose everything once you buy the business. So this is how I came up with the Exit 3D Studio.
Yeah, Muriel, in your prior experience and as you started to learn about this, did you run businesses? Did you sell businesses? Did you build a business, scale it up, and then sell it?
No, I did not sell it. I really come more from the buyer side.
The
Like
buyer side, yeah,
I am, it's more my lens, and the operator, because I have been a founder and I've been operating businesses, but more like pivoting my business through
I see,
different
I see,
things since 2017.
yeah. And you spent a lot of years helping business to business scale their acquisition and lead generation, a lot of times through LinkedIn. I saw that. Was there a specific moment that made you realize that the revenue numbers don't matter if a business isn't built to be sold?
I think maybe it was my internet connection or something. I didn't hear the end of your sentence.
Yeah, yeah. Yeah, sure. Um, was there a specific moment when you were working with businesses to help them scale up that made you realize that revenue numbers really don't matter if the structure isn't behind it?
Yes. So after, it depends the type of business, with my program, I was helping a lot of solo entrepreneur, and for them, like sales and revenue was everything. And of course, it was dependent on them. But for other businesses that I was also helping on one-to-one, not through my program, yeah, systems. Because also, if we generate like so many leads, but they cannot handle the the
Right.
closing after, that's system problems also. Or if they don't have the capacity to get, to implement after once they get the client. And also as a client, like so many, like service I can get, sometimes I see when they are
Yeah.
overwhelmed, and it's like, oh, I like the product, but you're not helping me enough. That's
You've been working with a lot of business leaders to, scale up and sell their business. What's the most common mistake that founders make that makes a buyer walk away?
Well, it's when they go to market, what we can identify right away, or at least once we start to get the numbers and talk, it's there are four structural issues that I see most of the time. Will be the founder dependency. For example, if all sales, all relationship, all decision, or even the implementation, is done by the founder, this is an issue. Because when the buyer buy the business, it does not buy the founder with it. Like the founder will
Right.
be
Yeah.
doing a transition for up to 1 year, let's say. At least this is what the SBA approve, when they do a loan, like a 1 year transition. But this is not, it's we prefer to avoid the founder dependency. Or at least when a buyer see that, they tend to discount the business because they won't be really buying a business, they will be buying a job because they will have to replace the founder. Second, a structural issue that is an issue for buyers are the revenue concentration. And this come in different form. For example, if all revenue come from one referral source, for example, um, if tomorrow the business transfer, then you can lose that relationship and not have the referral keep coming. So you're just losing potentially a lot of uh, clients this way. And then the customer concentration. If the business do, for example, let's I don't know, $1 million a year, has maybe 20, 25 clients. It looks diversified, like if we only know that. But once we dig and we look into the revenue of each client, if we start seeing a client that do more than 10% of the
Right.
of the revenue, for example, 100K, if it's already a problem and a red flag because that means that if this client doesn't stay, the revenue already dropped 10%. Like any client can leave at any time. So this is a big risk, 10%. And imagine when you have three clients that represent 50% of the revenue or even
You're in
more.
trouble.
And
Yeah.
this
Yeah.
happens all the time,
Yeah.
every time I sign NDA and I access the SIM, all the documentation, and I see that I don't even want to keep talking because this is just too risky. And a lot of small businesses, like that make less than 10 millions a year, they tend to have some sort of concentration like this. So this is a red flag. The third one is the revenue predictability. Is the business project based or does it have some sort of recurring revenue? Um, this also is priced differently because a project based, when it's project based, when the project is finished, the client has his project done and there is no more revenue to get from that. I mean, maybe there is. This is something that we work on at Exit 3D Studio, try to have some sort of recurring after the project.
Yeah.
When the business, for example, a contractor, and they are doing project and they need to have some sort of recurring revenue. We come up with some ideas and we help implementing that. And recurring revenue is generally speaking like safer for a buyer because he knows how much it will be, what part of the revenue will stay with him no matter what.
Yeah. You can predict.
Yeah, you can predict. And we don't do something that we don't do is projection, like magical projection, like based on we always project on real data. That
Right.
means history,
Yeah.
like the past 3 years, plus the trailing 12 months. We just do just like banks do. If a lender look at this, we look
Real
at it
numbers.
as well, real numbers. And only when we see the past, we can assume, okay, at least that year will be like that. And we can predict it that way. And the fourth risk or, red flags that we looked at. It's also the everything like the digital presence, not just from a branding point of view, but also a weak digital presence give a signal. It gives, okay, that means they are not generating leads online. There is no system. Leads are not coming up from systems. It's probably coming from the owners again. Like it must be word of mouth. It must be from his relationships. And this again, it does not transfer. So that's something also that needs to be fixed before selling, before going
It,
to market daily.
in in your expertise looking at these businesses, um, for small businesses, uh, is there a sweet spot? Is there a number of employees? Like one person can't do it, as you talk about, the founder dependency. The founder can't manage the websites and do the digital trafficking and generate the contacts and the leads. Is there a sweet spot with the numbers of personnel, 5 people, 10 people, 20 people, that makes successful businesses more successful?
No, that's difficult to answer that question because it depends on the activity. I believe also there could be some, one or man or woman show, that could sell if everything, let's say, is automated.
Mm.
I would think maybe a YouTube channel.
Right.
Everything is automated. You buy a system, um, and you could have a 50 employees company, uh, be heavily dependent on the founder and maybe even some key employees, lot of overhead, and be less transferable. So it really depends on the nature of the business and we never want to, as a buyer, we never want to buy a business that is understaffed also, because
Right.
that means once we step in, we need to hire a lot of employees to be able to run the operation correctly.
Tell us, excuse me, tell us about your readiness scorecard. How can somebody uh, get that? What's the website? How can somebody make themselves available to your talents?
Sure. So on my website, exit3dstudio.com/scorecard, it's possible to access an exit readiness scorecard. You will see some questions with multiple choice, and once you fill that out, you'll be able to see your score and see how ready is your business for sale, and also identify what needs to be corrected. What's the first priority to focus on, to because it's difficult sometimes to tackle everything at once, but at least you will see where you have the lowest score. This is where you want to make some improvements.
Yeah, and you write where your website is the first diligence. Most fail before the spreadsheet even opens up.
Yeah, the website, the digital presence, we see it right away. Though I want to say something. It's for for some buyers, it's also an opportunity, a weak digital presence, because for them it's someone who will know, for example, like me, I will know how to build a website, build a social media presence. I know I could get a business at a good price because of that. It lower easily the when we make a valuation, we usually take the EBITDA and we apply a multiple. When I don't see a good social media presence, and by this I will look at the traffic and the ranking, even the AI search, like do they know that company? Oh, they don't. That's a signal, and this easily we can drop the multiple by one.
Mm.
If
Yeah.
in the range it was going to be 4 times EBITDA, I can discount it to three.
Right.
Three
Right.
times just because of that, because it's so much work, and it brings so much value to a business that it will be discounted. So for a founder today who will could see, oh, okay, if you're not getting leads from your website or your LinkedIn, if you work on this before, then you get the upside. You're the
I
one who can sell 1 point more,
mm,
like one
right.
time EBITDA more, and you won't get discounted.
You have a blunt reality check in your framework. Buyers don't disqualify founder-led businesses; they discount them, is what you have said. What do you mean by that?
Yes, so they get discounted when they have when we are not meet when there are too many red flags, I would
Mhm.
say. Yeah.
Right. Yeah.
And I think a statistic like worth mentioning is I think it comes from the Exit Planning Institute. They said 70% of businesses that go to market don't sell. That means that all the one we can find online, 70 of them will not sell. And it won't and it won't be, like magical, like you look, it will not sell. No, it will go through so much work. You will have a lot of buyers submitting, signing the business broker NDA, a lot of conversation, a lot of work, even several offer accepted, several buyers doing the due diligence. And after, I think everybody get exhausted in the process. And that's why also I thought like because I've went through that really tenuous
Right.
process that I think it's so much better to prepare, years before, even if you don't need it, because you don't know. There are a lot of buyers out there, even some employees, managers that have a good position in a company. Sometimes they think, oh, what if they were building a business, or what if they were buying a business because it is sold as less risky than building a business. Um, I lost a bit my train of thought. Like you
And
said,
you suggest that you plan 3 to 5 years
yes,
ahead.
exactly. Because there are a lot of buyers, out there, including all those employees thinking about it. They will be, you know, looking at all these structural issues and will want to get, a safe business, not, yeah, not something risky because it can get so risky.
Right.
Imagine getting a loan for millions of dollars and the business don't transfer. It's so we want to avoid that.
If a founder wants to take the exit scorecard today, what's that one metric that they should pull to get an honest look at their business?
I would like to mention the I hesitate on the concentration and the founder dependency, but
Mhm.
yeah, I mean they are all equally important. I'm going to
Right.
tell you. Just maybe the revenue predictability could be a little less because this we can correct, we can, come up with new offer. There's always new way to be able to stabilize the revenue. But the founder dependency is a big one. Like, how do
Yeah.
you really step out of the business? Can you go away for 1 week and the business keep running, or
Well, it's
does
shut down,
everything
right?
collapse? Yeah, exactly.
Yeah.
Yes.
So help us out here. What are some actionable steps that business owners can take to move from a high buyer risk to a strong buyer position?
Yes, I would say that if you're thinking about exiting your business at some point, one of the first easy things to do is, I think, starting to document everything. So you start building some SOP. So if you step away for 1 week, at least someone else can go read and implement the way you will do it. That's, I think, one of the very first step to be able to already have a foot out of the door, by
Uh,
doing this, like preparing will be the first thing.
Protocols, document your process, right?
Yes, I think it will be the first things to do.
Yeah.
Yes. Also, if I can mention it, I describe a lot of these steps, and there are a lot of questions to ask when you're thinking about exiting in the new book that I wrote, the Valuation
The
Gap.
valuation gap, yes, and
Yes.
you can find that on your website too. It's there.
Yes, I've made a page on my website, and it's possible to download the first chapter for free. So already to get some ideas from the first chapter. And
And I see on your website you can also pre-order it at Amazon, Apple Books, Barnes and Noble, and Kobo. That's
yeah,
right.
at the day we're recording this, it is on Amazon on pre-order, but I am working on the distribution on the other ones. It will
Right.
be done by the time we post this
Well,
podcast for sure.
tell us why somebody should grab a copy.
Because you will learn all about how buyers think and how he evaluates your business. It might not be, and it will not be what your accountant tell you. It will certainly not be what the business broker is telling you. It will be a complete different story. So to really uh, not miss, any piece of the puzzle, it's a good book to read, to understand all the positions and see what you should be preparing for.
How long did it take you to write it? Was this a 5 year, 10 year project?
No,
You've been
no,
taking your time with it?
no, a few weeks, because I had this really map up in my mind.
Right, right.
Like it was so clear. I documented, like, while I was studying all this time in 2025, I was, gathering so much data, so much information. And after I did some more research, and then I went for
Hmm.
it. Like,
Yeah. Well,
yeah.
that's impressive. It's always good to have a book, and that adds a lot of credibility to your background. I wanted to ask too. You do this business, I take it, international. You're fluent, obviously, in French and probably a couple other languages. Um,
Just French and English. I wish I could, but yeah.
and so, do you run a global outreach? You have contacts in France?
I have contact in France. But at the moment, I am starting, this is a new adventure, since 2026. I am in New York City, so I am starting locally, though I'm communicating,
Globally, yeah, yeah.
yeah, with podcasts and online, so we can reach anybody. But I also have, like my LinkedIn profile and a lot of my network in France, so they see what I'm doing. So yeah, I will say it will be US and France.
When did you get involved with LinkedIn? How many years ago?
It was at the big, well, first of all, I think the first time I got my profile was a long time ago. It was in 2005 or 2006. I
Hmm.
was doing some internship in a real estate agency in New York, and another like intern was talking about LinkedIn, how we should all get our profile there. Okay, and I did it, and like
And has
20
that
years
been,
later,
yeah,
yeah,
has that been valuable for you?
yes, it has,
Yeah.
yes,
Yeah.
a lot.
And what other social media do you use?
Mainly LinkedIn. I like YouTube as well because you can, there are a good way to just have your message out.
Do you have a
And
YouTube channel?
I have a French one. I'm thinking to create one in English as well for Exit 3D Studio. I think it will make sense.
Yeah. Well,
Um,
tell us the YouTube channel for those French speakers out there. What's the title of the YouTube channel?
well, it's my name, Muriel Touati, and it's on this channel. It's all about LinkedIn tips.
Yeah. Yeah.
Like tips to use, like improve your profile, or
Yeah.
create good content, or lead
I did
generation.
watch it before I jumped on your this recording. I did watch a YouTube. It was in French. I didn't understand it, but you were very pleasant. It sounded like you were having fun. So
Yeah, yeah, I really enjoy doing videos.
yeah,
And but I think now you can translate it and have it in English as
right.
well.
Yeah,
The,
right.
the
As you watch it.
subtitle
Yeah,
at least,
yeah, yeah,
yes.
yeah,
Mm.
yeah. It's an amazing world we live in. This show is called Manager Memo, about sending a little note to the people that you work with. What would be your memo to people interested in selling their business,
So
or to buyers?
yeah, I was more thinking because manager memoir, I was more thinking buyers. I will say do your due diligence. If you're thinking to buy a business, always check everything.
Mm,
Do it seriously, but I have been able to do my due diligence on an offer without spending money because some people will tell you you need the accountant to do the financial due diligence. You can still do your own and find out the problem without paying $20,000 in in the quality of earning. Uh,
right.
Don't spend that much money. Do it yourself. You can figure things out.
Yeah.
AI can help you. So if you're a buyer, like always do your research. Don't spend too much on doing the diligence. And on the sellers, I would say prepare as early as you can, even if you don't need it, because there are a lot of buyers out there. You don't know if you won't be, the target for someone. They might come to you. They might want to buy your business, make you some offer. You need to understand what you're getting into and how to prepare for the highest valuation you want.
Mhm.
Otherwise, you will sell or not sell at a discount.
Uh, Muriel, we've had a great conversation. What have we forgotten? What did I not ask you about that you'd like to make sure we get out?
Oh, I think we covered a lot today. Yeah, we can connect. If anyone want to connect with me, I am on LinkedIn.
Good,
You
good.
can you can send me an invitation or follow me, but I like to connect directly. Yeah.
Well, I think those listeners out there that really want to understand about getting their business on the right track, or buying a business, you need to reach out to Muriel Touati, and she can help out. Thanks so much for. Go ahead. I'm
Not
sorry.
sure about the buying. I could give some information. Maybe by reading the book will give some insight, but I wouldn't want to say I am an expert at buying.
But certainly
But
preparing your business for sale.
yeah, yes, more on that side.
Yeah,
Yes.
yeah, yeah. Well, thanks so much for being a guest on Manager Memo today. It's been my pleasure.
It's been my pleasure too, Len. Thank you so much for having me.
Thank you.